If you're just looking at the Zcash chart and seeing a massive collapse, I'm telling you, you are about to make a huge mistake. This wasn't some random sell-off. It was a technically driven shakeout, and the data is revealing a story that the price action alone is hiding. Yeah, the damage? It's undeniable. Zcash plummeted a staggering 57% from its recent peak. We're talking billions in market value just wiped out, triggering a massive wave of panic across the entire market. But this is the twist that almost everyone missed. Google search data shows that retail interest didn't just fade, it literally evaporated the exact instant the price hit its peak. You see, that wasn't a sign of a healthy trend, it was the final euphoric gasp right at the absolute top. So stick with me here, and by the end of this explainer, you're going to have a crystal clear framework to decode the technical patterns that drove this sell-off and understand precisely what the charts are signaling for Zcash at this very moment. Okay, so first things first, let's actually quantify the damage here. That 57% collapse wasn't just a number on a screen. It was a brutal reset for thousands of investors. Look, it's really easy to get fixated on that 57% drop, right? From around $750 all the way down to $341. But that is only half the story. The crucial context, the part people forget, is that even after this violent correction, Zcash is still holding on to a 10x gain from its 2024 lows. This isn't the death of an asset, it's the violent, messy aftermath of a completely parabolic move. And that kind of insane volatility, well, it leads us right to the psychology behind the crash. So let's take a look at the anatomy of pure retail panic. This chart right here, it tells you everything you need to know. On November 7th, right as Zcash was peaking, Google searches were through the roof. Then what happened? As the price corrected, that interest didn't just fade, it absolutely nosedived by 80%. This, my friends, is the textbook signature of dumb money arriving late to the party and then being the very first to flee when the music stops. And that right there is the night and day difference. The retail mindset is just pure reaction. It's chasing pumps, buying into the FOMO at the peak, and then panic selling the dip. The professional thesis? It's the complete opposite. It's about ignoring the noise, focusing on the fundamentals, and viewing moments of extreme fear, just like this one, as a potential opportunity. So the big question is, how did the pros see this coming? Well, that brings us to the technicals. Let's decode the double top pattern that was basically screaming a warning from the charts. You know, for anyone who was actually watching the charts, the warning signs were flashing bright red. Zcash surged up to nearly $740, it pulled back, and then it tried for a second push. When it failed to break that peak again, it formed a classic double top. And that's a massive red flag for technicians, signaling that all the buying pressure was just exhausted. The reversal that followed wasn't a surprise. For them, it was an expectation. But here's where it gets interesting. While all the bears were high-fiving over that double top, the bulls were watching a much larger, more powerful pattern unfold. A long-term moving average crossover is still in play, and that's a powerful bullish signal that suggests the underlying macro trend is still shifting positive, even with this brutal correction. So this is the battleground for Zcash right now. It's a total tug-of-war. You have a perfectly executed short-term bearish pattern at war with an unbroken long-term bullish structure. The critical question for every single trader is, which one is going to win? All right, before we get to the key levels you need to be watching, if this is the kind of no-nonsense, data-driven analysis you're looking for, just take 1 second to hit that like button and subscribe to Crypto Global News. And definitely hit that bell icon so you don't miss the next critical update. Why? Because in a market this crazy, being just a few hours late can literally cost you. Okay, let's zoom out for a second. We can't just stare at the charts all day because these technical patterns don't happen in a vacuum. We've got to look at the enduring privacy narrative. See, for the long-term holders, this isn't some 5-alarm fire. It's expected. They see this 57% drop not as a fundamental failure, but as aggressive profit-taking after a massive 10x run-up. The core thesis, that fundamental demand for financial privacy, hasn't changed one single bit. In this sector, this kind of volatility is simply the price of admission. Okay, so this brings it all together. The final and maybe the most important question, is all of this fear actually the buy signal? Let's connect the dots. All right, let's get tactical. Here are the levels that matter right now. That support floor between $440 and $450, it's gone. That's now resistance. So all eyes have shifted down to the next major support zone, right around that big psychological $300 level. This is the line in the sand where many expect the bears to finally show some signs of exhaustion. So let's just recap. We have a crash driven by technicals, not fundamentals. We have retail hype completely wiped out. And the long-term story for privacy, totally unchanged. The charts are pointing to a potential bottoming zone just as fear is hitting its absolute peak. So I'll leave you with this question. Are you selling the panic with the retail crowd, or are you buying the blood in the streets?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.